The stock market explained for beginners. Let's start. There are two words, stock plus market. We'll split them, then put them together. What's a stock? A stock is a tiny piece of a company. Companies cut themselves into many pieces called shares. Shares equals how many pieces? Stock equals ownership. Price and market cap. Each share of a company has a price. Shares times price equals market value, called market cap. Example, 10 billion shares times $50 share price equals $500 billion market cap. Earnings, which is essentially a company's report card. Companies have costs and sales. Every quarter they share earnings. Good results can push prices up. Bad ones can pull them down. How a company gets into the market? Through an IPO, which stands for Initial Public Offering. The company is listed on an exchange like NYSE or NASDAQ. Now anyone can buy or sell those shares in the stock market, which is essentially a big store for stocks. How we measure the market? We use indexes. For example, S&P 500 index includes 500 of the biggest U.S. companies. Also, Dow Jones, 30 big names, and NASDAQ, more techy. Companies can be added or removed to an index. You can't invest in an index directly, but you can buy an ETF or index fund that copies the index. That's called passive investing. Simple, diversified, low maintenance. How Kitty can start investing. Open a brokerage account. This is your bridge to the market. There are lots of brokerage apps out there. Kitty uses Hedge because it's very beginner friendly. Now, pick one simple index fund/ETF, like an S&P 500 fund. Turn on auto invest and let time plus compounding do the work. The stock market is just lots of companies. Don't overcomplicate it. Start small. Be consistent.